Hi everyone. So this is a continuation of Income Tax Act and GST discussion on practical problems. This is part 2. We have done a part 1 earlier. In part 1 we discussed some problems with respect to income from salary and house property. We discussed about 3 to 4 problems from income from house property. Today we'll be continuing with income from house property and then the capital gains and income from business. So that will be in this part, and in the next part we'll be carrying on with GST. So this is part 2 of Income Tax Act and GST discussion on practical problems. And now here we are going to discuss question number 4 with respect to income from house property. So here the question is, Mr. Putin owns a house which uses for residential purpose throughout the previous year. The details are as under. Now the particulars of the house is given. That is, the municipal value is 5 lakh. Fair rent is 5 lakh 50,000. Municipal tax paid by him is 15,000. Now repair charges of house paid is 10,000. Depreciation of houses 10,000. Interest on borrowed capital. House was purchased on 31/3/2021 and loan was taken on 1/4/2021. So interest on borrowed capital is 2 lakh. So these are the particulars given that this house here Mr. Putin owns a house and it is used for residential purpose. Municipal value is 5 lakh. Fair rent is 5 lakh 50,000. Municipal tax paid is 15,000. Now, repair charges of house paid is 10,000. Depreciation of house is 10,000. Interest on the borrowed capital is 2 lakh. Now, we are asked to compute the value or the net annual value of the house. So here, the particulars is income from house property. Annual value of self-occupied house, one house for residential purpose is exempted. And by the new rule, up to 2 house for residential purpose, which is put vacant. By the new rule, a person can keep vacant a maximum up to 2 house. So while it is using for residential purpose, the annual value of that property, self-occupied house, is nil. Now, with respect to deduction under section 24, that is actual interest paid on borrowed capital. So we have to note here, interest on borrowed capital is deductible up to 2 lakh rupees. So there is a maximum limit. Interest on borrowed capital is deductible up to 2 lakh on or after April 1, 1999 with subject to certain conditions. So here the net annual value of the house is 2 lakh. So here he is not taxable for the house in residential purpose. So that was discussed in this case. Now the next question we have is question number 5. That is, Mr. Rowdy owns a house at Hyderabad. The Greater Hyderabad municipal value of the house is 40,000. Municipal value of the house is 40,000. He paid 2,000 as municipal tax. He uses this house for his residential purpose, but lets out half of the house with monthly rent of 2,000 per month. Compute the annual value of the house of Mr. Rowdy. So in the previous question, we discussed that for residential purpose, he is not, annual value of self-occupied house is nil. So we discussed that there is no income from such a house property because we are residing in it and it is self-occupied. So income from that house property in which we are living for residential purpose, using for residential purpose for self-occupied, is nil. Here there is a similar case here, but here Mr. Rowdy has also let out half of the house with a monthly rent of Rs 2,000 per month. So here it's not that there is no income at all. So we have to compute the annual value of the house of Mr. Rowdy. So computation of income from house of Mr. Rowdy. Half value of residential annual value is nil. Rest of the half portion is let out. So the annual value for half portion is nil because he is residing in it. Now to the particulars. Annual rent or municipal value, whichever is higher. So the usual process is done, whichever is higher should be considered. So it is per month rupees 4,000. So in annual value, we are taking as 4,000 into 12. Now, half of the house rental income is 2,000. So full house rental income will be 4,000. Therefore, rupees 48,000 compared with 40,000 of the municipal value, whichever is higher. So we were given that the municipal value is 40,000 and we said the half of the house is rented out and that is for 2,000. So of the whole house, it would have been 4,000. And now the annual value will be 4,000 into 12 and that will be 48,000. Now this 48,000 will be compared with the municipal value that is given as 40,000, whichever is higher. The higher is obviously the 48,000. So the gross annual value of the half the let out portion of the house is 48,000 divided by 2. Why we divided by 2 is because we calculated for the whole of the house and half of it is occupied by the owner and there is no income from half. So 48,000 divided by 2, that will be 24,000. Now we will look into the deduction. So the municipal tax paid for the whole house is 2,000. In that, he uses it half for the residential and half is let out. So in the deduction also, we are taking only half. So the municipal tax paid, that is 2,000 divided by 2, 2,000 per month divided by 2 will be 1,000. And this value will be deducted from the gross annual value of the house. Thus, the annual value of let out portion will be 23,000. So that is with this question. So here, while we are using the house property for residential purpose for the self, we don't have any income from that house property and no income is calculated. Where at least if half a portion or a portion of it is let out, the income from that portion is to be calculated. So we saw both the scenarios here. Now towards the next question, that is compute the income from house property of Mr. Malpani who owns a house in residential colony. He let out his house during previous year and the details are under. So this house is situated in a residential colony but he is not residing there. It is let out during the previous year. And towards the particulars, the rent received is 3 lakh. Municipal tax payable is 25,000. Repair expense of house is 25,000. Insurance premium of house paid is 8,000. Now ground rent paid is 4,000. Now interest paid on borrowed capital to construct house is 92,000, 3,054. 92,000, 3,054. Now, computation of income from house property. So, the rent received is 3 lakh. And let's look into the deductions or less municipal tax payable. Municipal tax can be allowed on the payment basis. So, this is payable will allow deduction in the year of payment. So here it is payable and it is not paid. So that deduction is not applied here. That is nil. If it was paid, we would have considered it. But here it is not paid, it's payable. Now gross annual value. Thus here we have is 3 lakh rupees. Now deduction under section 24(4) of income tax. That is standard deduction at 30% of 3 lakh rupees. That is 90,000. Now, deduction under Section 24 of Income Tax Act, which is standard deduction at 30,000, 30% of 3 lakh, that amounts to 90,000. So this deduction is 90,000. And interest paid on borrowed capital is 92,354. Now, there is some things that we should note here. 1. No deduction is allowed in respect of repair, insurance, and ground rent. Once again, no deduction is allowed in respect of repair, insurance, and ground rent, etc. while calculating the income from house property. Only standard deduction at 30% is allowed from the net annual value, that is rent minus municipal tax. Now, the second point is that deduction in respect of interest paid on loan taken for purchasing or construction of the building is allowed. So, the deduction in respect of interest paid on loan taken for purchasing or construction of the building is allowed. So, once again, please note that no deduction is allowed in respect of repair, insurance, and ground rent. In the question, we were given repair, insurance, and ground rent. So don't be confused with it. These are not deducted from the income of house property. Instead, we calculate the gross annual value, and from that, a standard deduction of 30% from the net annual value can be deducted. And here, the rent received is 3 lakh rupees. So that was taken as the gross annual value, and there was no other fair rent or whatever was given. Only the rent received was given, that is 3 lakh. And now that is taken as the gross annual value. Now a standard deduction is 30% of 3 lakh, and that is 90,000. This amount is deductible. Now, then again, we have that interest on borrowed capital. This was borrowed for the construction of this house, and the interest was 92,354, and this is deductible. Now, in previous question, we did note that the interest on borrowed capital is deducted up to maximum of 2 lakh rupees. That is also to be noted, to a maximum of 2 lakh rupees. Here it is 92,354. So the entire amount is deductible. So the deductions alone is 90,000 plus 90,000 of the standard deduction plus 92,354 of the interest on borrowed capital. That will amount to 1,82,354. This 1,82,354 can be deducted from 3 lakh. So the net annual value will become 1,17,646. That is with income from house property. The next we are gonna look into income from business. So here we have only one question under this category in the textbook. That is Miss Fraud and Fraud Enterprises, represented by its proprietor, Mr. Champat Lal, has some fixed assets and transactions related to fixed assets during the year. You are required to compute the depreciation admissible during the previous year. So, fraud and fraud enterprise represented by proprietor. The proprietor is Champat Lal. He has some fixed assets and transaction related to those assets during the year. Now we have to compute the depreciation admissible. So the particulars is given as follows. Written down value at the beginning of the year. For the plant and machinery, it was 5 lakh. So written down value at the beginning of the year. For the plant and machinery, it was 5 lakh, and for the building, it was 15 lakh. 5 lakh for the plant and machinery and 15 lakh for the building. Now, purchased on 1st 10th 2021. Purchased on 1/10/2021. So, for plant and machinery, the purchase amount was 10 lakh, and for building, that is 15 lakh. So once again, the written down value at the beginning of the year for plant and machinery is 5 lakh and for building is 15 lakh. Now purchased on 1/10/2021 with respect to plant and machinery is 10 lakh and with respect to building is 15 lakh. Now sales during the year for plant and machinery was 4,90,000 and for the building there was no sale during the year, and the depreciation rate of plant and machinery is 15%, whereas for the building is 10%. Now we have to compute the depreciation of fraud and fraud enterprise. So to the particulars, right, written down value. First we will look into the plant and machinery alone. We'll calculate plant and machinery and building separate. So first we are discussing about plant and machinery. Written down value is 5 lakh. Now, additional purchased on 1/10/2021 was 10 lakh. 10 lakh rupees. So, initially written down value is 5 lakh. Then the additional purchase on 1/10/2021 is 10 lakh. Now, the sale during the year was 4,90,000. This is to be reduced. So, once the sale during the year is reduced from written down value plus the additional purchase value minus the sale during the year. So that is 5 lakh plus 10 lakh minus 4,90,000. So the gross block for plant and machinery will be 1,10,000. Sorry, 10,10,000. 10,10,000 is a gross block for plant and machinery. That is written down value of 5,000 plus additional purchase on 1/10/2021 of 10 lakh minus sale during the year, which is 4,90,000. So gross block is 10,10,000. Now the depreciation rate of plant and machinery is 15%. So we are to calculate the 15% of 10 lakh 10,10,000, and that is okay, 10 that is 1,51,500. So 15% of 10,10,000 is 1,51,500. This is the depreciation for the plant and machinery. Now, so the net block becomes, now we have the gross block minus the depreciation. That will give 8,58,500. So once again, with the calculation of plant and machinery, the written down value is 5 lakh. The additional purchase was 10 lakh and there was a sale of 4,90,000. So while calculating the gross block, we add the written down value and the additional purchase amount or value. From that, we deduct the sale value. So 5 lakh plus 10 lakh minus 4,90,000. So the gross block becomes 10,10,000. And it is also given that there is a depreciation at the rate of 15%. So what we do is 15% of this gross block, that is 15% of 10,10,000, and that is 1,51,500. This 1,51,500 is again deducted from 10,10,000. So the final value or the net block of the plant and machinery we get is 8,58,500. So that is with plant and machinery. Now we have to calculate for building. Similarly, in building, the written down value is 15 lakh. Then again, the additional purchase is also 15 lakh and there was no sale. So there is no reduction there. So the gross block becomes 30 lakh. Now the depreciation is given at 10%. So 10% of 30 lakh, that becomes 3 lakh. So this 3 lakh is deducted from 30 lakh and we get the net block as 27 lakh. That is with the building. And the next we are gonna look into capital gain. So here the first question, Mr. Vardharaj sold his residential house for 25,90,000 in September 2021. which he was purchased in the year 2014. So this house was purchased in 2014 and sold in 2021. So there is more than 24 months gap, and this is a long-term asset. So the next one we are considering is the indexed cost. So whenever there's a long-term asset, we long-term capital gain, we take the indexed cost and indexed transaction and all, index acquisition cost. But if it's short term, we don't use the indexed numbers, or we don't use the index. Now the indexed cost of his house is 11 lakh 25,430 indexed cost. So he bought the the actual cost into the index, that is the index of the uh, year of sale divided by year of acquisition. So that is index cost, and that amounts to 11 lakh 25,430. Now he paid commission at 2%. So these are the factors that can be reduced from the actual consideration received. The actual consideration received is 25 lakh 90,000. Here the index cost of the house is 11 lakh 25,430. In case if the index cost is not given and the index of the years of a year of acquisition and year of sale is given along with the actual cost, we have to find the index cost. Further, a commission of 2% of sale consideration, that is 2% of the 25 lakh 90,000 was the commission sale consideration to the broker that was given to the broker. He purchased another house on 10th March 2022. Now there was a second purchase, that is in 10 March 2022 for 12 lakh 25,000. Compute the capital gain of Mr. Barathrajan. So we are going to compute the capital gain for Mr. Varadarajan in the year 2022-2023. So it is to be noted that, okay, the purchase of the second house was in 10th March 2022, and the sale of the first house was in September 2021. So the sale and the purchase both falls under the same financial year of 2021 to 2022. Until 31 March 2022, it is under the financial year 2021-2022. The financial year 2022-2023 starts from April 1st of 2022 to March 31st of 2023. Now, let's go into the particulars. Sale consideration 25 lakh 90,000. Now, we can reduce the commission that is paid to the broker. That is 2% of 25 lakh 90,000, and that amounts to 51,800. So this is one of the amount that can be reduced. So the net sale consideration becomes 25,038,200. That is because we have already reduced the commission to the broker. So the net sale consideration becomes 25 lakh 38,200. That is the actual money the person got in his hand after giving the broker money. Now we have further reductions on this. So we have to consider the cost of acquisition. So this house was acquired and there was a long gap. So we are using the indexed cost of acquisition. That is already given. So we use it directly. That is 11 lakh 25,430. So we reduce this 11 lakh 25,430 from 25 lakh 38,200 of the net sale consideration. The net sale consideration is calculated after the reduction of the 2% commission to the broker from the sale consideration. That is how we got the net sale consideration. From this net sale consideration, we are deducting the indexed cost of acquisition. Now, again, we have one more reduction here, that is exemption under section 54 for the purchase of new house, assuming that Mr. Varadarajan fulfilling all the conditions to get exemption. So here we are while calculating a long-term capital gain, that is why we are calculating long-term capital gain. That is why we used index cost of acquisition. Along with that, in the same financial year, he also bought a house. So we have to consider the exemption under section 54 for the purchase of new house. And there is an assumption there that Mr. Varadarajan fulfilling all the conditions to get exemption. So the conditions to get exemptions are satisfied. That is the assumption here. So the cost of that building was 12,25,000. So from the net sale consideration, we deducted the indexed cost of acquisition and we got the balance as 1 lakh, 14 lakh 12,770. 14 lakh 12,770. And in this purview or here, there was another building purchased and that is brought under the exemption of 54, assuming that all the conditions for the exemption are met, and the value of that building was 12,25,000. So this 12,25,000 is to be further deducted from 1,41,000, sorry, 14 lakh 12,1770, that we have the balance from the net sale consideration. So overall it tally to 1,87,770. So this 1,87,770 will act as the long-term capital gain for Mr. Varadarajan. Now to the second question, that is Mr. Ayush Singh from Dhani. Sorry. Yeah, the second question is Mr. Ayush from Singh from Dhani Chapra village is a qualified software professional. Submitted his data for the computation of taxable income under the head capital gain. He provides the following information. House purchased in December 2002, that is for 6,75,400. Now the sale, the above house in November 2021. So the house was purchased in 2002 and that was for 6,75,400 and it was sold in 2021 and that was for 40 lakh. Now, he also paid 1% brokerage on sale consideration, that is 1% of the 40 lakh. Now, purchased another residential house in January 2022. So after selling this, he selling the house in November 2021. He purchased another house in January 2022 and that was for 25 lakh. Now he also invested in bond issued by NHAI bonds, then under the section 54 EC for an amount of 5 lakh. The cost inflation index in 2002-2003 is 105, that is 105, and for 2021-2022 is 370. So here we have to calculate the index cost of acquisition. So the cost inflation index of both the years, the year of acquisition and the year of sale is given, and we have to consider the index cost. That is, index cost is index cost in inflation index of the year of sale divided by cost inflation index of the year of acquisition into the actual cost of acquisition will be index cost of acquisition. Once again, index cost of acquisition is equal to cost of acquisition into cost inflation index of the year of sale divided by cost inflation index of the year of acquisition. Now let's compute the capital gain for Mr. Ayush Singh. for the assessment year 2022-23. So the sale of the house as well as the purchase of the new house both comes under the same year of to the same financial year 2021-2022. So the assessment of that will be in 2022-23. Now sale consideration is 40 lakh. Now 1% brokerage was paid on this 40 lakh, so we have to deduct that 1%. 1% amounts to 40,000. So we are deducting 40,000 from 40 lakh. Now that is okay, and that is 40,000. That is 39,000. Give me a second. Let me do the calculation. Yes, so sale consideration is 40 lakh. Now 1% brokerage amounts to 40K, and this 40K of brokerage amount shall be deducted from the sale consideration of 40 lakh. That will give us 39 lakh 60,000. Now we have to calculate the index cost of acquisition. That will be 6 lakh 65,400. That is the actual cost of acquisition into the index. We have to make it index, so the index of the cost inflation index of the year of sale divided by cost inflation index of the year of acquisition, that is 675,400. That is 6,75,400 into 317 divided by 105. 317 is the cost inflation index of 2021-2022, and 105 is the cost inflation index of 2002-2003. The index cost of acquisition thus obtained will be 20,39,065. Now this has to be reduced from the net sale consideration, and that will give us 19,20,935. So out of the consideration we got, presently we have 19 lakh 20,935 as the balance. In respect to this, we have further exemptions. That is, he also purchased another residential house for 25 lakh. Further, he also invested in bond issued by NHAI bonds, that comes under exemption of 54EC for 5 lakh. So the purchase of new residential house, which comes under exemption in section 54, plus the investment in bond issued by NHAI bonds, that comes under the exemption of section 54EC. The aggregate of it becomes 30 lakh. So 30 lakh is exempted. Now from the net sale consideration, the balance is only 19 lakh 20,935, and he has entitled for an exemption of 30 lakh. So the net result is that there is no long-term capital gain for him. So that is with this problem. Now the next problem is Miss Venkata Reddy B and Co. showed his block of asset. Okay, Miss Venkata Reddy B and Company showed his block assets as on 1/4/2021 at the WDV of 5,25,000. He purchased another asset within the block during the year 2021-2022 for 4,90,000. He sold the entire block of assets during the year 2021 for 12,80,600. So this all takes place in one is in 1st of April. So that is the start of the financial year of 2021-22. Now he purchased another one also in the same financial year 2021-2022, and the sale of these were also done in 2021-2022. So all this took place in the financial year 2021-2022. Now we have to compute the capital gain of Venkat Reddy B and Company. So this is a short term, we are going to calculate the short term capital gain. The entire transactions, all the transactions took place in the same financial year. Now, for the assessment year of 2022-2023, all these transactions took place in 2021-2022. So, the assessment year will be 2022-2023. So, WDV of block of assets, it is 5,25,000. Now, additional purchase is 4,90,000. So, the total will be 5,25,000 plus this 4,90,000, that will amount to 10,15,000. So, that is the total purchase of the total asset. Now, the sale was for 12,80,600. So the total asset was 10,15,000 and the total sale, the sale of entire block was 12,000 80,600. So the short-term capital gain here was the short-term capital gain here was 2,65,600. So that is the difference between the consideration he got from the sale and the total asset. So that is 2,65,600. So that is with respect to income from this is okay, income from capital gains. The next we have GST, some practical questions and answers with respect to GST, and that will be discussed in the next part. And thank you all for listening, and I hope this is helpful for everyone. Personally, I had the most trouble with the problems, so that is why I decided to share these problems here. So please like, subscribe, and don't forget the bell button so that you get an update each time I upload a video or a podcast. Thank you all for your support. Thank you. Take care.